Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ross Kay. He's a home ownership consultant who works out of the wealthyhomeowner.ca. Welcome back to the show, Ross.
Hey, thanks for having me back, Jim.
A regular listener asked us, will B20 freeze the real estate market leading to a possible crash? And will B20 result in an over-indebted public hitting a wall? We've heard many of accounts what this change means, Ross, but no one has addressed these questions. Can you?
Yeah, I know what your listener's asking there. I think the amount of commentary that's been out there over these rules, to us, Jim, it just further exemplifies the lack of understanding about home ownership today that's out there. We've heard. Actually, I think it was going to appear on BNN tonight on their House Money show with Greg Binnell. The Rate Hub, the owner of the mortgage interest rate site Rate Hub, which is I would never recommend that anybody uses that site for some specific reasons, but they have a young person who is their voice that happens to be an owner of Rate Hub, who also happens to be an owner of the real estate brokerage Zoocasa, which Rogers was forced to sell last year. So you've got a tech company here running these sites making these comments. Long story short, they're going to be on BNN tonight, and I looked at online at their website, and it looked like they're going to claim a 21% drop in buying power. Now, if your listeners will go back to our shows, the very first place, people, anywhere in Canada where the term buying power and OSFI B20 rule changes were discussed were right here with Jim on Howe Street. Okay? You can Google and try to find any other place where those words appeared before they appeared in their show. What that means, there are people out there in the industry who listen to the show trying to gain some insight to what's going on. This B20 rule is an example of that. The B20 rule, truthfully, is applied differently across Canada. Now, you are not going to hear those words issued anywhere else. You won't find it on the OSFI website. You won't find it on any TV show that's been done since last fall when the original mortgage qualification rate came into play. You won't see it anywhere. The only place you're going to hear that is here on Howe Street. Now, we don't even talk about this with our own members on the Wealthy Homeowner. They just simply get this included in their strategy as if it's nothing, because to us, it's nothing. But the B20 rule is far-ranging differences depending on which housing market that you're going to buy into, because the way this rule interacts with the housing market varies from municipality to municipality. Although on the surface it looks the same, when someone asks, is this going to freeze the real estate market, leading to a possible crash? I'm going to say, no, it's not going to freeze the real estate market. Every single real estate market goes up and down. First-time home buyers enter the market, first-time buyers exit the market. Their share of sales change. That is simply a fact of every real estate market. What happens with those first-time buyers, depending on their share of the sales, impacts every single metric that's out there in a housing market. The problem is that people don't know how to measure a housing market. They don't know how B20 is going to impact it. So the first B20 impacted the housing market in the spring of this year. Now, Jim, do you remember on our show about GTA home prices, Greater Toronto Area home prices, in the spring of this year? Do you remember what the newspapers across the country were publishing?
Oh, it's going crazy. It's going nuts.
Going crazy, going nuts. 30% house price gains. The same propaganda that was put out in Vancouver back in 2016. It wasn't these 30% house price gains. It's simply that first-time buyers became impacted by the first B20 rule that was initiated in the fall of 2016, but didn't hit the market until March of 2017. In March of 2017, that caused first-time home buyers to withdraw from the market. As a result, the average selling price increased. As a result, the benchmark prices increased, and they increased for the following 4 months because of the methodology that's used. There were approximately 40,000 home buyers who purchased a home in the GTA believing the nonsense that the B20 rules caused in the market. What it did is it caused the false illusion of higher house price gains that were actually taking place. Because all the metrics that are used are looking at selling prices instead of buyers, what buyers are paying. Two totally different things, even though it sounds almost the same. Will the B20 rule result in overdebt people hitting the wall? No. What the B20 rule does is it curtails the amount of money you can borrow and spend on a house. That's all that it does. So what it's actually going to do, it's going to benefit the indebtedness rate by lowering it, because you won't be able to borrow as much money to buy a house. There's been a whole bunch of theories out there about going to private lenders, the bank of mom and dad. None of that is supported with 40 years of real estate data. It doesn't exist. So no, they're not going to hit a wall because of B20. What they're going to do, though, is that, A, refinancing their mortgage, they're probably, in many cases, when they are up against that wall, going to be forced to stay at the bank that they're at. By staying at the bank, and the bank knowing you have to stay there, it means that the mortgage discount that banks normally give will not be available. Anybody questions my authority on that comment, all they need to do is look at how the mortgage discount has dropped over the last 6 months at Canadian banks. It only dropped when these rules came into place, folks. And this B20 has already impacted the market more. Right now, the posted rate for the 6 major Canadian banks averages 4.99%, 5%. That caused the mortgage qualification rate to go up to 4.99%, which means that if you're up against the wall and you need to refinance, that you're going to have to refinance as if interest rates were at 5% if you want to move your mortgage from one bank to another. Now, there are many people, Jim, who will not qualify at that. They're not going to lose their house. They're not going to be forced to sell. What they're going to be forced to do is renew their mortgage with the bank that they're at. They're no longer going to be able to shop around. That's where the problem is. So, will it freeze the real estate market? The real estate market, the Canadian real estate market, has been correcting now for a year. You are starting to see that show up in many metrics around the country, but it's being misrepresented. Today's GDP rate for August dropped for the first time. If you look at how housing market impacts GDP and all of the things that's included in GDP, you would understand that the announcement of that decrease is directly related to that. So that's B20 in a nutshell, Jim. It's not going to freeze the real estate market. The real estate market takes care of itself. The real estate market has already been correcting. The real estate market, contrary to what everybody says out in Vancouver, already shows over a 28% price correction has already taken place. I know condominium prices have gone up. I also know that you can buy houses at 50% of what they were selling for in the spring of 2016 in certain parts of Vancouver. It will not impact people. It will not force people into indebtedness or bankruptcy. It's simply going to mean the banks are going to make a little bit more profit on their mortgages when those people would be best served by getting a better deal elsewhere that they're no longer able to get.
We'll have more with Ross Kay right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Welcome back. We're speaking with Ross Kay. Well, Ross, you brought it up briefly. Today it was announced the GDP in Canada has fallen in August for the first time since October 2016. You've been on the show warning about that and how economists misread how the housing market will impact GDP. Were you just proven right, or is this a coincidence?
I'll let your listeners make that decision for themselves, Jim. I think that if you look at what the comment was today about that this is the first decrease since the fall of 2016. I think if you also listen to what's gone on in the show, I've told everybody on the show that the housing market started to correct in the fall of 2016. What happens is that the lag between a housing market changing, the metrics that measure a housing market, the reaction of the public to the housing market, the decisions that they make takes 12 months to 18 months before it shows up in ancillary data. Because it takes so long before it shows up in the other data, like GDP, people don't see it as a causation effect. We know what it causes in terms of the economy. So, we knew ahead of time, as we talked in your show, that GDP was not going to stay on the pace that it was on, that it was actually going to decline. The rest of the economy, I'm assuming, I'm not an expert in those areas, would have to be ramping up at such a degree to make up for a slowdown in the housing market. I didn't think it was possible. And apparently it wasn't. So you have your first drop in GDP this year. Now, I'll tell you that there has not been enough house price appreciation or volume of homes being sold to support rises of GDP going forward. It's my belief that all of the forecasts for GDP are wrong, and although now we are getting a lower dollar, Jim, a dropping because the housing market is slowing down, so interest rates are not rising as a consequence, which leads to a lower Canadian dollar. I just thought everybody knew these things were fact. I mean, I guess if I was really smart, I would have realized years ago, decades ago, that people don't know these simple metrics, and I would have just simply started playing the Canadian dollar for rising and dropping in value based on the housing market. But I just assumed everybody knew that, so that really was not. There really wasn't an opportunity there. It appears that there's a great opportunity there. GDP has dropped for August. You're going to see that it's dropped in September, in our opinion. I don't believe the rest of the economy is going to make up for the withdrawal of the housing market, and I do not see that happening for a very long period of time. We are seeing a weaker dollar as a result of the Bank of Canada not being able to increase interest rates. They can't increase interest rates because the housing market is slowing down. It's like that interest rate trap we've talked to you about, mortgage rate trap we've talked to you about in the show before. I believe it's happening right now in real time. I believe that the August number, that's what you're seeing. I am not qualified to talk about the rest of the economy and how those components of the GDP roll out. All I know is how housing impacts it. And I do not see enough. In my mind, I can't come up with what other part of the economy is going to make up for the shortfall.
We'll have more with Ross Kay right after this.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're talking with Ross Kay. Ross, in the past, you've openly criticized benchmark prices along with almost everything else organized real estate has to say. Another listener has emailed us asking, does Ross believe that benchmark price has limits on how much they can distort prices?
Do they have limits on how much they can distort prices? Yeah, there's a limit on how much they can distort the price. The limit is reached, Jim, once the methodology catches up. So you've seen this in many of your listeners. They only really look at their own local housing markets, and they hear their information being released from the local real estate boards or Korea on pricing and the benchmark price. What that means is that they don't understand, they can't compare how the Real Estate Board of Greater Vancouver and the benchmark price being released for Vancouver, the price that the Calgary Real Estate Board releases for Calgary, and the benchmark price that the Toronto Real Estate Board releases for Toronto don't match up. In other words, if you followed the selling prices of the houses in those three distinct real estate boards, you would ask yourself, how can they come up with this benchmark price? I'm looking at the selling prices in Toronto, and I'm looking at what the benchmark price has changed. I'm looking at Calgary and watching what the benchmark price has changed. And now I look at Vancouver, and I say, the benchmark price has changed way more than what the selling prices of the homes have in comparison to what happened in Calgary and Toronto. That's because the methodology, although claimed to be the same, is not actually the same at all. So, in terms of how much can any real estate board benchmark prices be skewed, Vancouver is the worst. It is the absolute worst. The crazy benchmark price changes that they recorded in the spring of 2016 were crazy. You did not see that magnitude of change happen in the Greater Toronto area this spring. The benchmark prices did not jump to the same magnitude. That's because their methodology is a little bit different. Calgary's, their benchmark price now has been pretty much stable for 2 years. But guess what, folks? Their average selling price has been pretty much stable for the last 2 years. So how can that happen? And then you get the big change in Vancouver and a medium change in Toronto. It's a lag. So that distortion that people are seeing in the benchmark price is one of the reasons a consumer should never listen to a real estate agent to get a pricing decision on a house. If you're going to buy a home, do not believe the price that's presented to you as a listing price. Do not believe the comparables that they show you to justify that listing price. And don't believe any metrics of price change in your local community that come from the real estate board, like a benchmark price. Throw them in the garbage. You can seek out alternative measures of price so you have a better understanding what that property is truly worth. You can hire an appraiser. You can have them do a full appraisal on the property, and you have a better idea of what that property is worth. But what you do need is you need some independent advice that's going to give you an honest opinion. Not only where the prices are trending, up, down, flat, whatever, but also on what the individual property you're looking at, that price is trending, where it is going. Because even within a marketplace, the category of home that you're buying, its price velocity change is different than other categories. The way that the trading cycle works is you can capitalize on a market by jumping ahead of the market in terms of what category of home that you're buying or selling. You can easily wipe out all of your real estate commissions, the loss in home equity by hiring a real estate agent, by knowing where the trading cycle is in the community that you're moving in, and gaining that extra 4 to 5% back in lost equity, which you have to shell out to a realtor. So you can have it as a break-even situation. You just can't do that with a real estate agent.
Ross, there are many home buying guides offered for free on the market today. Which one of them would you recommend our listeners download and follow?
None. And I'm sorry to say, Jim, that's the truth. I can't tell you to go to CMHC. I can't tell you to go to Genworth. I can't tell you to go to any of the real estate companies out there. I certainly can't tell you to recommend that you download the Canadian Real Estate Association roadmap, home buyer's roadmap, or roadmap to home buying, because all of those guides are wrong. What do I mean by that? Listeners understand. Those guides are so wrong that the OSFI instituted Rule B20. That's how bad those guides are. All of the guides that you have out there have led people down the wrong path to home ownership. They have led you down a path that you should never have traveled. The government, the OSFI, the king boss of everything financial in Canada, finally put their foot down because of how all of these stakeholders have misled the public. They have brought their foot down with B20 because all of the bad home buying information in these home buying guides, which direct you to make a bad home ownership decision. The very first question, whether you should ever use a home buying guide. Now, it's got to be published prior to the date of this show. Okay, so prior to today's date is to look for this question. How are you paid? Do you get a check weekly? Do you get direct deposit biweekly? Are you paid monthly? Are you paid irregularly because you're self-employed? That is the number one question any home buyer should be asked. Because that question starts out every single other question that's going to follow. If you're paid bi-weekly, why do the vast majority of Canadians who are paid bi-weekly make monthly mortgage payments? Why? So that the banks can make the additional profit by making sure your amortization stays as long as possible. Why do people get into trouble with monthly mortgage payments when they're paid weekly or bi-weekly? It's because you're required to put aside part of your income each week or pay period with the plan to pay for your mortgage when it comes due at sometime during the month. Now, that works when everything is going good, but the second anything gets out of line, that strategy no longer works. The best practice is this. Your mortgage payment comes out of your bank account hours after your paycheck goes in. If you were paid bi-weekly, this is free advice for all your listeners. So people in our wealthy homeowner buying program, When they're ready to buy, they have to go through all this. They may not like it, but they're going to be way further ahead. This is the only way that we can say it's a no-cost, zero-risk strategy. That's the only way we can do it. Because if they follow our procedures, guided through over 5,000 real estate transactions, studying them, they're not going to make a mistake, like this mistake. If you're paid monthly, you make your mortgage payment monthly. If you're paid biweekly, you make your mortgage payment biweekly. If you're paid weekly, you make your mortgage payment weekly. If you want to do anything else than that, you have a separate bank account set aside that has a full 1 month of payment sitting in there. And that's the start. Because your plan should be to have 6 months put aside. Because with 6 months put aside, with the right strategy, you can carry your property. The bank will assist you in carrying your property for a full year. You can get out of any trouble that you're in a year, folks. Any trouble you're in. So you have no risk of losing a family home. You have no risk of having to sell with high fees and then get back into the market with double the fees. Extra land transfer tax, extra real estate fees, extra moving costs. All of the things that wipe out people's equity. So in terms of home buying guides, no, Jim. There is not a home buying guide out there that I would recommend. And like I told your listeners, if you want proof, the very first question of any home buying guide has to be, how are you paid?
Ross, thank you so much for being on the show.
Hey, thanks a lot for having me on, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. You're listening to HoweStreet.com radio. If you have any questions for the show or our guests, you can send them to info@HoweStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of Howe Street Media Incorporated.